All right, so today we're going to be looking into tokenized treasuries.
Oh,
and basically taking a look at where the stability of government bonds meets blockchain.
yeah.
So you can kind of imagine like investing in a government bond with the same ease as like buying a token on your favorite crypto exchange.
Yeah. It's an interesting development.
So why should anyone care about these tokenized treasuries?
Well, I mean, think about it for a second.
Okay.
Traditional bond markets are usually pretty difficult for like the everyday investor to access. You have high minimum investments, you have complex processes, and there's a real lack of transparency.
Yeah, for sure.
But with tokenized treasuries, all those barriers start to crumble away.
Okay, interesting.
You can invest with much smaller amounts of capital and track your investments right on the blockchain.
Okay, so greater access, more transparency.
Exactly.
Gotcha.
And then on top of that, you have the potential for greater liquidity.
Okay, that makes sense.
Yeah.
So today we're diving into Etherfuse and their Stablebonds as a prime example of how all this works in practice.
Yeah, and Etherfuse is super interesting because they're taking government bonds,
Okay.
specifically Mexican government treasury bills called CTs,
Right.
and making them available as tokenized assets on the Solana blockchain.
Gotcha.
So these tokenized bonds are called Stablebonds, and they aim to offer the stability of those traditional bonds with the added benefits of blockchain tech.
So you're basically supercharging a traditional stable asset with like the power of Web3.
Exactly.
Okay, I like it.
Yeah.
So walk us through how Etherfuse and these stable bonds actually work.
Sure. So first things first,
Yay.
you're going to need a crypto wallet that supports Solana,
Okay.
something like Phantom.
Okay.
Then you're going to need some USDC,
Okay.
because that's what you'll use to buy the stable bond.
Makes sense.
And then, of course, a little bit of SOL to cover those transaction fees.
So wallet USDC SOL.
Yep.
Check.
Exactly.
Got it. But then what?
Well, this is where it gets a little interesting. Okay.
Etherfuse has a unique approach
Okay.
where you need to mint an Access NFT on their platform.
Huh, okay.
And this NFT acts as your key, basically granting you access to their stable bond offerings.
Okay.
So it's a way for them to maintain regulatory compliance while still operating in that decentralized environment.
So an Access NFT.
Yeah.
Clever way to manage compliance.
Yeah.
What happens after I get the NFT?
Then you just go through the standard know your customer process.
KYC.
Yeah, verifying your identity, making sure everything's above board.
Yeah.
And once you're through that, you're ready to start exploring their bond offerings.
So there's a bit of a familiar feel here
Right.
with KYC,
Yeah.
blending traditional finance with DeFi.
For sure.
So speaking of offerings, what kind of stable bonds are we talking about?
So one example would be the 28-day ETH stable bond,
Okay.
backed by those Mexican government treasury bills we talked about earlier.
Right.
So you're essentially buying a tokenized version of a short-term Mexican government bond through their platform. Okay, so it's like I'm buying a piece of the bond market, but in a much more accessible and streamlined way.
Exactly.
So how does actually buying one of these stable bonds work?
It's pretty straightforward.
Okay.
You just browse through the available stable bonds, choose one that you like, and purchase it using your USDC.
Gotcha.
And just remember to factor in a bit of SOL for those transaction fees.
So it's a few clicks, and boom, you're a stable bond holder.
That's it.
Now, how do these stable bonds stack up against other Web3 assets?
Right.
We've got volatile cryptos, NFTs, complex DeFi protocols. Like, where do these stable bonds fit in?
Well, that's where I think the real value proposition comes in.
Okay.
Most Web3 assets are known for their, well, let's call it excitement,
Yeah,
but also their unpredictability.
for sure.
Prices swing wildly and there's always that risk of losing your shirt.
Right.
Stable bonds, on the other hand, are aiming for something different.
Okay.
They're aiming for stability.
Right. So they're not about those like crazy price swings.
Yeah.
But how do they actually achieve that stability,
Right.
especially in the world of Web3?
Yeah. It really comes down to the backing, those CEEs, the Mexican government treasury bills.
Right.
Those are like the foundation of these stable bonds.
Okay.
So by tying the value of the tokenized bonds to these real-world government securities, Etherfuse is trying to create this stable asset that's less susceptible to the fluctuations we see in the crypto market.
So it's like taking the stability of a government bond and marrying it to the accessibility of blockchain.
Exactly.
Pretty cool.
Yeah. I think it's a pretty compelling proposition, especially for investors who are wary of that roller coaster ride.
Right, makes sense.
You get the potential benefits of the blockchain, like that increased access and transparency,
Yeah,
but with a level of stability more aligned with traditional finance.
for sure. So let's flip the coin for a second.
Okay.
What about potential drawbacks?
Right.
Are there any risks?
Well, of course, no investment is without risk.
Right.
But one concern would be the regulatory landscape.
Oh.
Etherfuse is taking steps to ensure compliance,
Mm-hmm.
but the world of DeFi is still evolving.
Yeah, for sure.
And new regulations could always impact tokenized treasuries down the road.
It's a fair point. This is still early.
Right.
So there's going to be a lot of uncertainty.
Yeah, definitely.
Anything else to keep in mind?
Another consideration would be the creditworthiness of the issuer.
Okay.
So in this case, we're talking about the Mexican government.
Right.
So it's important for investors to research the issuer,
Uh-huh.
understand their financial standing,
Okay.
and assess the risks associated with holding their debt.
Gotcha. So even though we're talking about new tech, it's still important to do your research.
Oh, absolutely.
Like you would with a traditional investment.
Yeah, the fundamentals of investing still apply.
Makes sense.
You need to understand the asset,
Yeah.
assess the risks,
Okay.
make sure it aligns with your goals and your risk tolerance. Don't let the allure of blockchain and DeFi blind you to those core principles.
Great advice. So let's talk about actually holding and managing these stable bonds.
Okay.
So I went through the process. I purchased my stable bond using USDC. What can I actually do with it?
Well, you essentially have this tokenized representation of that underlying government bond sitting in your Solana wallet. So you can hold on to it, obviously.
Yeah.
Benefit from the stability it offers.
Right.
Or you can swap it back to USDC if you need that liquidity.
So it's like having a little piece of the bond market in your pocket.
Exactly.
What about returns?
Yeah, so they do generate yield.
Okay.
Etherfuse advertises a 9% APY on their stable bonds.
Yeah.
Of course, past performance isn't a guarantee of future results.
Sure. Yeah.
But it does give you an idea of the potential returns.
9%? That's pretty attractive.
Yeah, it does.
Compared to like a regular savings account.
That's fair.
But obviously it's important to remember that higher returns come with higher risks.
That's a really crucial point. Don't just chase the highest yield.
Right.
Make informed decisions, based on understanding the the risks involved and your own financial goals.
Great advice. So we've talked a lot about Etherfuse bringing government bonds to the blockchain, creating these stable bonds,
Right.
which offer this blend of stability and accessibility.
Yeah.
But I want to hear from our listeners. What are your initial thoughts?
Yeah. Does this concept resonate with you? Do you see the benefits outweighing the risks? We'd love to hear your perspective.
Yeah, it's really fascinating to see how this is all evolving, blending the old with the new, trying to find that balance between innovation and stability.
Right.
It makes me think about the bigger picture, the impact of tokenized treasuries on the future of finance.
Yeah, that's where it gets really interesting.
Yeah.
Imagine a world where government bonds are just routinely issued and traded on these blockchain platforms.
Yeah.
You could see so much increased efficiency, lower costs, and greater accessibility for everyone.
It's like giving this centuries-old system a digital upgrade.
Exactly.
And it's not even just government bonds.
Right.
Like, what about all the other assets that could be tokenized?
Yeah.
Real estate, fine art, intellectual property, like the possibilities.
I know, it seems endless.
Yeah.
We could be looking at a future where ownership and transfer of these assets is so streamlined.
Yeah.
Like more transparent and more secure.
It could revolutionize everything
Yeah.
about how we think about investing in wealth management.
Exactly.
And it's not even just about individual investors.
Right.
This could impact institutions, corporations, and even governments.
Oh, absolutely. Imagine governments being able to raise capital so easily through blockchain-based bond issuances.
Yeah.
It could change public finance and even cost of borrowing for governments.
It's crazy to think that this could all start with just tokenizing a government bond.
I know, it's like a ripple effect that
Yeah.
could reshape the entire financial system.
Pretty mind-blowing.
It really is.
But like with any tech shift,
Yeah.
there are going to be challenges and uncertainty.
For sure.
Regulatory frameworks need to adapt.
Uh-huh.
Cybersecurity is paramount.
Yeah.
And investors need to really educate themselves about the risks and opportunities.
Exactly.
So we're still early,
Definitely.
but it's a super exciting time
It is.
to be following all this.
For sure.
But as we wrap up, I want to leave our listeners with one final thought.
Okay.
If tokenized treasuries become the norm,
Yeah.
how might that change your investment strategy?
Right. Would you add them to your portfolio?
It's definitely something to think about
For sure.
as we all navigate this new frontier of finance.
Yeah. Great question.
Awesome. Well, thanks for joining us on this deep dive
Yeah, this was fun.
into tokenized treasuries and Etherfuse stable bonds. Until next time, keep exploring. Stay curious and always do your own research.
Absolutely.